Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shail Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the Nifty is flattish with a negative bias. You can actually see 24,600 and thereabouts is where we are hovering at the current market space. The pockets that are holding up in this market are the same that we had discussed right in the morning. So consumer durables and the broader markets, financial services, infra. Now metals have picked up some strength in the latter half of the trade. But it's the FMCG space that continues to reel under pressure now, 2.4% down. Media stocks have also slipped nearly 2%. Autos are now driving in the slower lane as well. 0.7% of a cut can be seen on this one as well. Along with it, Pharma, PSU banks, oil and gas, even IT and the banks have all lost some strength right in the afternoon trade right there. When we look at the top movers on the Nifty, you have L&T that's holding up strong, 2% higher. Life insurance companies like SBI and HDFC Life, Kotak Mahindra Bank and BPCL seem to be the top 5 movers, but large part of the FMCG stocks are all down. Sharp losses being seen across Tata Consumer Products, that's now down 4%, HUL, Nestle. Then you also have Tata Motors that's dragging at about 1.9% lower. Axis Bank, Britannia, ITC, these are the kind of stocks that are actually dragging in trade. Within the F&O, you have some interesting names like Supreme Industries, Delivery, Kalyan Jewelers. Those are the pockets that are holding up, and some of the PSU pockets, including defense and railways, are also showing us some strength right now. Good afternoon, Shell. And
good afternoon, ladies and gentlemen. It's a sector and a stock specific day. In particular, the textile space, which is in top form after news that Bangladesh's biggest textile center has shut down, resulting in the closure of about 170 units, and that has enthused a lot of textile plays such as Banswara Syntex, such as Gokul Das Export, such as Himmat Singha Seede, and many other counters such as RSWM, AYM Syntex. Across the board, you see a very strong move coming in. Apart from that, the entire wealth management space is doing well. There is no stopping Bombay Stock Exchange, a strong move coming into Angel One. So individual stock performers and a few sectors are on the green as far as this specific start on Monday is concerned. Remember, we've had 3 weeks of gains. In the last week, Nifty is appreciated 550 points. The Bank Nifty 40 points. A bit of that is being taken back by the markets, nothing to be worried about. Nifty Bank 50 points lower, Nifty 50 71 points lower. This is a consolidative phase in which the Nifty is moving, and no better person than Mr. Sunil Subramaniam, a market veteran who joins us in Market Today, is with us. Namaste Sunil ji. A very warm welcome. Much of the pain seems to be out of the system as far as the sell-off was concerned. A record high on Nifty small cap and a mid cap index. How do you see sentiment on Dalal Street, sir?
Domestic mutual funds and DIIs are buyers. Adjusting the low GDP data with RBI coming and downgrading the GDP, but a positive 1.5% rise expected in next quarter's GDP. Has put 6.8 at 5.4 previous quarter. So that, if it actually turns out, will mean that you'll get an EPS up guidance in January. But hesitant to take a call on which sector would benefit, because the effect of a good monsoon is yet to feel itself on inflation. You know, it's a very strong thing that normally a good monsoon means softer inflation. But contrary to that, we have had a very good monsoon, but also food inflation high. So coming to terms with that, I think it's going to take a bit of understanding and time. The second aspect is that FIIs, after selling over October and November, have come back in December. And it's about 20,000 crores from what I saw that they turned around. Now, this is probably because the correction in the market meant the valuations got a bit more reasonable. But I don't expect this to sustain over the next couple of weeks because it's holiday season. People are already going to be off for the Christmas and New Year vacation. So there will be thin trading from the FII counters for the next 2 weeks. So I expect a consolidating market over the next month, I would say, till the January earnings season kicks off and demonstrates that the GDP is actually coming through better.
Good afternoon to you, Mr. Subramaniam. Good to have you with us. Let me start off by understanding any key triggers that you're spotting. You know, in the absence of that, the markets have turned increasingly more volatile over the last few days as well. And today, you know, when it comes to the upcoming Q3 numbers as the next major trigger that could probably come into the markets, the Godrej mid-quarter, update was definitely not on the strongest side. That pulled down the entire FMCG sector lower. First up, what is your expectation on the FMCG space? Q3, what is your expectation? After a muted Q2, do you think some kind of an uptick could be seen?
In the FMCG space, not yet. Because I think we are going through what I would call as a reasonably double whammy. So what do I mean? At best of times, FMCG is a safe sector, consistent 7 to 8 to 9% top line and bottom line growth is why they are darlings of the FIIs because of the consistency in their earnings, right? But how does that actually happen? Is because they generally have pricing power. When commodity prices increase, they are able to pass it on in the biscuit price increase or the shampoo price increase and so on and so forth. But this time around, what's happened is that the inflation has hit the consumer too. Because food inflation, for example, wheat goes into biscuits, right? So the inflation has not only hit consumer demand, because when your consumer surplus gets reduced, you will postpone the purchases of certain things to the extent that you can. You'll make that toothpaste last a couple of weeks more, right? So in the absence of that, in the demand not shooting up, in the food prices like the wheat prices or palm oil for soaps, right? Multiple input costs for FMCG have gone up, and they are not able to raise the prices. So what was earlier an easy pass-through mechanism today looks a bit dodgy at this point in time. So I would say that, and FIIs also are being cautious. See, generally, it's a significant part of the large cap index, and FIIs like the consistency. So when they are seeing this happen, I think they're taking a bit of money off the FMCG table today. You saw that and hence we will now have to probably wait for inflation numbers as they come forward to show that the monsoon effect is seen and food inflation starts declining. Second, you got to wait for the guidance from these companies in the January 10th onwards to say, okay, this quarter was bad, but how is the outlook looking? So I think given all of that, at this point, since they don't have pricing power to pass on input costs, it's better to wait and watch an FMCG space at this point in time.
That's a very good assessment on FMCG, and as Sakshi has been pointing out since morning, a lot of selling pressure has emanated in the sector. Dabur, Marico, and all started with Godrej Consumer Products, whose business update was taken by with a bit of a shock in the market. That counter is down 9%. It pointed to a margin squeeze. It pointed to slowing top line, and of course slowing profit after tax as well. Sunilji, how are you seeing this entry of new IPOs? Now LG is in the offing as far as market is concerned. Of course, this is something that we have been watching for the past 25 years. Is this a good development that Korean giants such as Hyundai and LG are just floating OFSs and taking money away from the Indian markets to this trend?
See, 2-3 things here. One is that it's good that large companies in the market, in the general market, are coming to the stock market. Okay, liquidity. We are so far. If you remember historically, Maruti was the only representative of the auto sector. So everything was focused on that. The more the companies come and get listed, the better price discovery happens. So it's generally a healthy thing for the market that these companies are listed. Second aspect is that these issues will be a success because the FIIs from those countries themselves subscribe to this. Because for them, buying a Hyundai in India is better than buying a Hyundai in Korea. So you'll have Korean FIIs or Japanese FIIs come in and buy their company. So these issues will go through, right? But like you saw in the Hyundai, retail participation will be hesitant. Why? Because this money which they are raising is not being reinvested in the business. I have a very simple thumb rule on IPOs. Companies raising money for its own business is very different from that which is seeking to pay off its earlier investors, in terms of profit booking. I'm not saying those kind of shares will not go up. If their business goes up, of course they will. But the immediate thing is that these people are actually booking their profits because they see the valuation in the right space. And if you see the overall IPO pack last year, you would have noticed that promoters had been increasingly booking profits and reducing the stakes because all of them were feeling this good to be true. It won't last. So let's make money while. That's the only small list of concern in terms of these issues being timed at this point in time, that they are saying it's a good time to make our returns on our investment into India years ago. So from their point of view, it makes perfect sense. It's good from an overall stock market that these companies come into the listed space. But right now at the IPO, unless they price the IPO in which the domestic retail investor can make money. If you're trying to take off all the future earnings that's there in the listed price, then I'm not sure that they are issues to be subscribed to now. Rather, you wait for their performance post-listing, see how they pan out, and then take a call. They're good companies about that, there's no doubt, obviously. But when do you invest in an IPO at this point? My sense is that choose companies which are raising money for their business purposes as opposed to cashing out of the promoters.
Important point right there, and we'll keep that in mind right there too. And this will be an interesting space to watch as more details unfold from the IPO and the RHP that follows after the DRHP as well. That's something that we will also get more details from. Apart from the IPO space, also to get a sense, since you were talking about how FIIs are finally, looking at India favorably after having sold off over the last, 2 months odd or so, an exodus took place. The key segments, you did talk about some of them which are preferred ones for the FIIs. Let's talk about the heavyweights, IT and the banks, for instance, as well. What is the kind of sense that you are holding on the banks and the IT space particularly? Financials have been a key consensus play for most of the analysts thus far. What is in the offing? We've seen HDFC Bank come back to record highs, so that's the private sector boom coming in. PSU banks, after disappointing over the last few consolidation months, are now also coming back in flavor. IT, on the other hand, there is a lot of US overhang yet again with Donald Trump's coming over and taking over the office too. So how does one really approach these two spaces?
In fact, leaving aside today's marginal correction in these two sectors, they're two of my top picks from a 1.5 year to 2 year perspective. Okay. The reason I say is, it's clear. You mentioned Trump, and then the Trump thing is the fact that US economy itself is showing strong gains, regardless of Trump coming and supporting, right? And if you see then that with Trump also inclined to be soft on the taxes on the corporate side, the profitability of US companies go up, then they will invest in IT. And I think Indian IT companies have gone way past those days of the call center and those kind of a cheap outsourcing to value-added IT consulting work. So I am second aspect is that the strength of the dollar, because you see, one of the things to remember right now, there's a Trump trade going on in the dollar, but I don't think this is going to just stop, because when Trump puts tariff, this is a slightly nuanced view that I'm giving. When Trump puts tariffs, right, he has to fulfill that election promise. But the immediate impact of that is that inflation is going to rise for the consumer there. If inflation rises, then the Fed's chance of cutting interest rates goes that much beyond, which means that with higher interest rates, the dollar will continue to be strong. And if the dollar continues to be strong, the rupee will have to weaken. It may not weaken more than other emerging market, or it may be strengthening relative to emerging market, but it's still net weaken vis-a-vis the dollar, which means that the rupee earnings of IT companies are going to get a boost, right? And the return of the FII. Now, FIIs get a great level of comfort from IT because that's one sector where information is clearly available, but they are easily able to counter check the information with the buyers in the US stock exchange because they have very good relationships there. So that comfort in terms of the consistency growth of these companies is much higher. So, and given the fact that FIS just started coming back, I expect mid-January onwards. I think the next month you give it a break because they are on holiday season. They'll come back in the first week of January, then redeploy. From mid-January, I expect a strong return of the FII. And when they come strongly, the passive funds have to buy the index. And there, if you see, IT is a significant component. So I believe that though IT has run up quite a bit on all of this news, I believe that the business prospects of IT with US corporate earnings and corporate businesses being on a good wicket, is good news for the IT sector. So I will continue to be, I think over the next year, year and a half, it's a good sector. On the banking and financial services, some part of what I said holds true to the extent that they are a big part of the large cap index. So the return of the FII means automatically passive money will flow in. And I think BFSI is about what 30-35% of the large cap space. So that much buying support is going to be coming in when the FIIs come back, number one. Number two, right? You're seeing that from the RBI governor's speech, the CRR rate cut obviously gave about a lakh of crores of additional lending, but the pressure on the margins, right? Now you have deposit rates and credit rates more or less matched at about 11%. So the pressure is not there. So this money which they get can easily lend. So their lending cycle looks good. Second is RBI governor also mentioned that the health of the banking sector is on top grade. You'll have to take his words there. And the third aspect is that I see that the next year is going to be driven by two key things. One is consumer discretionary growth, right? With the K-shaped recovery in the consumption going, I think that will sustain. And the second is the capex cycle. With the government restarting the capex program, which went on a back burner for the last 4 to 5 to 6 months. The next few months they will restart it, and then private capex coming back. Corporate lenders are going to have a very good time. Because and the public sector banks would slightly have a tilted advantage because private sector banks tend to be more retail oriented, public sector banks are more corporate oriented, so they would tend to benefit. And the third aspect of the banking space, I would like to extend it to say BFSI. For the right hand side, the wealth management firms, the stock exchanges, the broking firms, the asset management companies, and the insurance companies. I think with India capital income now touching $2,800, that incremental surplus is going to be sent into the savings stroke investment bucket. And I see good times for that side. So I think BFSI would again be a very strong pick for me. So IT and BFSI are my two top picks.
Right, ladies and gentlemen, 250. Let's just take a detour into the market. So far, it's the IT space that is in the green. The index barely managing 55 points uptick. It's a sideways trend today, and there is nothing much that comes out in trade except for maybe record highs on the small cap index. The Nifty Metals Index is the top gainer, 0.4% higher. This is the strength that we had referred to on Friday in our closing commentary. You'll see a lot of hectic activity coming that side. Jindal Steel and Power 1.6%, 1.8% higher, 966.8. You have strength across the board when you see the F&O space as far as metals are concerned. Hind Copper up 1.4%. You have a strong move coming into counters such as Steel Authority 2.1% higher. Tata Steel 1% higher. NMDC and JSW Steel also in the green. So these are the counters that are doing pretty well here. And the early morning burst that we had seen in CEAT has also helped a lot of tire companies come up with very sharp gains. Look at JK Tires up 6.8%. A strong move coming into Balkrishna Industries, as also Apollo Tires. And the news driving CEAT, of course, is its acquisition of Michelin. CEAT at the moment is up 11%, and when you look at the top traded list, CEAT is at the rank of 4. About 1600 crores worth of shares have been traded on CEAT. That's how the mood is in the market. Sakshi.
Okay, got that. Mr. Subramaniam, another space that we'll draw your attention to, again from the export-oriented spaces, is the pharma space. How are you really looking at this?
With the divide between export-oriented and domestic. And in domestic, you have hospitals, diagnostics, medical tourism. So I think domestic is on a good wicket. I think post-COVID, you've seen a sharp awareness of things, and people are now quickly going to hospitals thanks to the insurance penetration. So that's on a decent, strong, sustainable wicket. But on the international front, what I said on the IT holds true here. That is, dollar strengthening, rupee depreciation helps the export-oriented pharma companies, part of which is in the price. So that's one story which I would think will sustain. But more importantly, on a longer-term story, there's an interesting play which I see happening, which is that the China play. And we all know about China plus one, China plus one. I'd like to give a slight twist to China plus one as China plus one plus one. Hello.
Okay.
So what do I mean there? You see, the first part of the China plus one, we are substituting China, right? But the China plus one is something different, which I see playing out and want to patiently see this space, which is that with 60% tariffs being hit on China, but only 10% on countries like India, China is not going to sit down like getting it lying down. So I see that, and you can see the political things on that already, right? I see China actually using India as a outsourcing for API and other stuff, and to some extent finishing the product here so that it gets exported into US as made in India, but with the APIs coming in from China. So if the government is able to use the PLI scheme well and smartly, and I see green shoots of that in two things. One is, if you notice, the government has relaxed visas for Chinese engineers and Chinese technicians to come into India for China-related ventures. Second is the LAC-related Gadbandhan or whatever, calming of the waters there, right? So I think that you will see that increasingly the opportunity for India lies from taking manufacturing from China. And bear it in mind, China's technology and manufacturing production skills, everything are far ahead of India yet. So to the extent that India ties up with China, it will help improve our productivity over a period of time, but also to circumvent whole Trump. And Trump needs to put this because it was an election promise. At the end of the day, he's not going, he will turn a slightly blind eye to this kind of a routing because end of the day, he doesn't want inflation for the US consumer to go up. So I think cards played smartly by India with China, which I already see the green shoots, will lead that in pharma is a big space where in the API space and everything, India's PLI can give a big boost. And Indian companies which get into that space, tie up, use the PLI smartly, I think are good. So from a medium term, I think that's the way it will play out. And so I'm bullish on the pharma sector from a medium term perspective, despite the recent rise.
2:55, ladies and gentlemen. We have about 35 minutes left as far as market is concerned. It's turning out to be an okayish kind of a consolidating day. This will be the right time to also look at stocks that have hit record highs and some of them which have moved with a lot of volume. In terms of all-time highs, SEAT is the new addition. Chalet Hotels 4% higher, 937. A good move coming in on something that Vineet Bolinchkar talked about when it was at 6% higher, 85. And you have the usual suspects whom we talk about on a daily basis, which continue to add more flavor, more strength, and more admirers to their all-time highs. So Bombay Stock Exchange, CDSL, HDFC Bank, Coforge, Dixon, what are the names that we've been talking about? Policy Bazaar, EID Parry. These are, look at how sharply Trident Limited has moved, 11% higher, 38.2 rupees, 19.7 crore shares have been traded, which is 42 times the 5-day average. Look at how Wellspun Living is moving, 173.8, 6% higher. About 1.33 crore shares have been traded, and of course this is 7.6 times. You have many other companies, Alok Industries in this space. Vardhaman Textiles we've marked repeatedly, 5.24% higher. These are the stocks that are moving with great strength and great conviction after the problems in Bangladesh as far as their textile part is concerned. Has given way. What else? See, ITI 2 days ago, again you have a 14 percentage point uptick. Remember, on Friday the counter rose 13% but hit an upper circuit of 20% earlier. It's the highest traded counter today, 3054. A strong move coming into compatriot MTNL and several other telecom players as well. But these are some unusual names that are moving today. You have in the form of another stock which is doing pretty well is the AMC space, NAM India, UTI AMC, Aditya Birla Sun Life AMC. All of them are in a nice uptrend. Sakshi.
Okay, let's get back to our conversation with Mr. Subramanian then. Sir, any key stocks that you have probably identified over the last 4-5 weeks of consolidation where you're adding a fresh any positions? That's what investors really need to know.
I know that, but unfortunately, SEBI regulations don't permit. I've accepted independent directorship in a AMC, so I'm governed by the SEBI regulations, so I can't do stock specific.
Any idea that you could suggest that, you know, where are you going to be deploying fresh funds in terms of, key sectors? Now, you did talk about two of them, which are your primary, top performers like, BFSI and IT. Apart from this, within the broader markets, particularly, if you could highlight.
I think consumer discretionary is a big space, and I define in a very broad manner to include real estate, auto, and consumer durables within the consumer discretionary space, right, and high-end retail. So I think that's a very good space, which I think has got good potential.
Okay, got that. Well, we'll thank you, Mr. Subramaniam, on that note for sharing these wonderful insights on the markets with all our viewers. All the best to you. Hope you have a fantastic time till the time we meet you next on Business Today Television. Thank you so much for being with us. Viewers, what we'll do is we'll quickly look 24,628, 0.2% lower. The Nifty Bank is just marginally in the red at 53,468. But we'll also welcome another guest on board now to the last half hour of trade now. With us is Brijesh Singh, Senior Technical Analyst at Stock. Tell us, what are you looking at into the market technically? What is really looking good in the charts?
So, actually, but before the individual stocks, let me update regarding with the Nifty and the Bank Nifty has been considered. Right now, what I feel is that we have already seen the swing high of 24,857 zone, and after that we are seeing a sideways or profit booking of consolidation. Now immediately, if I talk about the support, that lies at 24,400, 24,500 band, and if that thing breaks, then 24,000 psychological mark with 24,100 would be coming in the play. Whereas our resistance size has been considered, then 24,857 or say 24,870 is a hurdle. If that thing crossed, then 25,100 would be coming in the play. Regarding with the Bank Nifty been considered, the immediate support, if I talk about, then it lies at 53,100, 53,100 band. If that thing breaks, then 52,600 to 52,700 would be coming in the play. Resistance wise, immediately resistance lies at 53,900, followed by 50. Both the indices right or some shorts building up at the higher level, whereas the price are sustaining at the present zone, but the oscillator or the indicator, whichever you are following on the 15-minute chart, hourly chart, daily chart, they have topped up and they are making a lower highs formation, which indicates that in the coming days we might try see some sort of profit booking which might drift Nifty down. Whereas the individual stocks are there, some stocks which are on the sell side. So I'll start with since media stocks are looking little bit weak, so if someone wants to play on a sell side, then play with Sun TV, 753 or 755 zone it's been trading present rate, or any rise towards the level of 761 can take a sell call in it with the stop loss of 780 or 85, and then play for the target of 720 or 25 zone. There is another sell call which, if someone wants to play, then Bharat Forge on a shorter term time frame of the chart, the stock had trading below the important moving averages, and 1360 zone it's been trading. So any rise towards the level of 1360 where one can play a sell call with the stop loss of 1385 and play for the target of 1300. There are two buy calls which look promising. As Shailaji was been mentioning, Trident, definitely it's looking good with the stop loss of 36. One can play on a buy side. Past 1 week, all the textile stocks are moving up. Now this stocks on a daily chart, it has trading above the 200 moving average. The stock had broken on was trading below the 200 moving average on 21st of Jan, and from there it was been down. It's today the first day it has moved up significantly. So present rate can be used to take long position with the stop loss of 36, play for the target of 42. There's one more on the buy side for a pullback rally, that is Dell Delivery. 371, 72 around stock is been trading. Present rate can be used to take a long position in it with the stop loss of 352. That is swing lows base formation. From there we can see a pullback towards the level of 398.
We have 27 minutes of trade. Namaskar, Brijesh ji, a very warm welcome. Would you want to comment on HDFC Bank? Record high. बड़े दिनों बाद लोगों की तारीफ सुनने को मिल रही है HDFC बैंक की. What are the charts telling you, sir?
So HDFC Bank के बारे में अगर आप नोटिस करेंगे सर, first of all today session we have seen stock making a new 52-week high. The volume breakout has been there. Daily chart पे अगर आप देखेंगे तो already W pattern formation था. That is a bullish sign. Previous swing highs were in the range of 1780, 80 or 84 zone. So till this doesn't break, one can keep that thing as a stop loss. For suppose someone has bought it at the lower level, that would be your trailing stop loss. Suppose someone has missed the rally of buying, then I'll say that if it trades somewhere around 1830 zone, one can take a buy call. Again, the stop loss would be same 1780 zone. One can keep that thing as a stop loss. Now on the higher side, the first resistance lies at 1940 zone. If that thing breaks, then 2080 would be the another level as a resistance for the short term bet. I am looking for 1 month to a 2 month time frame. So presently trend is positive. Buy side with the stop loss of 1780. Fresh buying, not at this level. If it trades 1830, then be on the buy side.
Okay, got that. Well, Brijesh, also help us understand in terms of the movers in the F&O space, where are you keeping your attention? You did talk about delivery, Kalyan Jewellers, Supreme Industries, that's also buzzing in trade. And we also have, you know, Angel One doing very well in trade today. KPIT Tech has come back after a strong haul. Piramal Enterprises is buzzing. F&O, where should one keep an attention today?
So Dell already I have discussed regarding with the FNO stocks has been considered. Then one can look out AP Apollo also in today's session. In today's session, we have seen, you know, the previous swing high had been tested, 1600 zone has been tested. If someone wants to play on a buy side, present or let it cross 1602 zone, and with the stop loss of 1575, be on a buy side for the target of 1660, 1665 zone. Dell obviously I have discussed, and even one more counter which looked a little bit promising is the Voltas. You know, the stock had already made a base at 1640 zone, and it has moved up above the 50-day simple moving average, and with the bullish candlesticks formation, 1767 been trading. So if someone wants to play long, then keep a stop 1728 or 1735, and whereas on the higher side the resistance lied at 1820. That is the first resistance. If that thing cross, then 1870 or 75 would be the next resistance. So I feel that Voltas in coming we can see pullback rally on the higher side.
Okay, that's an interesting theme that is being discussed. Please also look at Voltas against the backdrop of the news that you will see LG, Lucky Gold Star. Actually, it was known as Lucky Gold Star at one point of time. I'm talking about maybe 25 years ago. And then they stuck to LG. This is about to get listed in the Indian markets. You see a lot of hectic activity happening on Blue Star as well. 5-7 days of uptick, and time high will be there. Electronic goods, brown goods, which is AC, microwaves, fridge. So this is a whole set of 5, 7, 10 stocks, 3 frontline, Blue Star, Voltas and Whirlpool, which you see as branded, and the 4 or 5 that provide the white goods on which the stamping is of these big companies. Please keep this lot in mind, and you will see hectic activity in this space for the next 5-7 days. That's what's happening. And what is also clicking in trade is Sakshi Kalyan Jewellers, 5.5% higher, 7 have a view on this one, sir?
Shailaji, before this, I'll just update you regarding your stock, which you have noticed me right now, Blue Star. I was looking Blue Star on a monthly chart, a decent candlestick. You know, it has all the past 2 months negativity and is overcome with a bullish engulfing candlestick. If we look out the daily chart, already base formation of rounding bottom has been there. Whenever the rounding bottom happens, on the base of the rounding, the volume is dry, but left hand side and the right hand side, we see the huge volume. So it has already in that process of forming the rounding bottom. 21 and around it's been trading. Present rate, if someone has a view, at least for 2 months to 3 months, one can take a buy call. Stop loss wise, if I say 90 and 2000, the stock can jump towards the level of 2700 mark. Now regarding with the Kalyan Jeweler, as you have pinpointed, again with a huge volume, we have seen stock of days, high lows formation in oscillator front, and the previous swing high of 786, that is the 52-week high. We would be seeing that would be breaking and stock would be moving up. We used to take and keep a stop loss of little bit deeper, 43 around or 745, and it can go up to the level of 840, 845 zone in short term time.
Okay, got that. So that's an interesting one on the gems and the jewelry space and Kalyan Jewelers as well. Another space that I'll draw your attention to now, Brijesh, is the metals pack, which has started to shine bright in trade today. It's pulled up from the lows and it's now trading at the day's high for the index itself. And when we look at the kind of moves that we are seeing across the board, Hindustan Copper is moving up 1.8% higher. You have Jindal Steel and Power up 1.8% to Authority, MDC, Tata Steel, JSW Steel and Nalco, all of them showing at least slight gains in the trade right now. Metals have been extremely volatile off late, Brijesh. What's next for this one? Anything that you sense on the chart for the index itself, or key stocks that you believe that now are ready for another leg up?
So I'll look out with first the heavyweight, that is Tata Steel and SAIL. They are looking promising. Tata Steel 150 around, it's been trading the 200 moving average on a daily chart. It's trying to touch that level of 150, 151 zone. I feel that we might be seeing that stock will be breaking this level. Dip can be used to take a long position, or present rate can be used to take a long position. Stop loss wise, one can keep a strict stop loss of 144. On the higher side, minor resistance light at 156, 157 zone, but I feel that we can see a pullback really towards the level of 170 in Tata Steel, but time frame at least for a couple of months. Regarding with the sale has been considered again after making a double bottom formation at 110, we be inching towards the level, inching towards simple moving average of 127 zone. So let it breaks this level of 127, and if it trades above 127, one can take a buy call and end with the stop loss of 122 on a closing basis, and we can see pullback towards the level of 140, 144 zone. NMDC, we are seeing multiple time rounding bottom formation on the daily chart. Not at the present rate of 242, but I feel if it trades near the level of 233, 235 zone, then one can take a buy call and end with the stop of 5, and then
Okay, fair point. That's the move that is coming in. Sakshi, you've marked metals, but
Yeah.
let me just mark a couple of other stocks in the cash market. APL Apollo, 2.2% higher. Ratnamani Metals, 3429, 2.25% higher. And of course, from the NBFC space, what has come up after many months is Poonawalla FinCorp. 362. Is this the beginning of a new trend? This is around 200-day DMA, and till about a month ago, somewhere on October, between October and November, a huge volume on the counter. Let's get Brijeshji's view on Poonawalla FinCap, sir?
Say Poonawalla FinCap, the daily charts had made a base from, and even in today's session we are seeing some sort of a hammer candlesticks formation or a single candlestick for which indicates that on a reversal side. So 362 around it's been trading, present rate or dips towards the level of 350, 352, 355 zone, one can take a buy call. Strict stop loss should be maintained of 340. If that thing breaks, then we might see stock drifting towards a level of 325. So stop loss should be maintained of 340. Present rate or dip can be used to take a long position, and whenever such thing happens, we see that the stocks which are trading below the 200-day simple moving average, they try to make a base formation of double bottom, triple bottom, and from there we see touching that level of 200-day simple moving average on the daily chart. So 200-day simple moving average value is at 394 zone. The first level of resistance would be this, and if that thing breaks, then the next level would be 415 or 20 zone. So present rate can be used to take long position with a stop loss of 340.
Okay. I'll pull up one more stock from the broader market that's jumped now nearly 17%. CE Info Systems or Map My India. Let's look at that stock. It's shot up in trade with sharp moves towards the last 15 minutes odd. You can see the kind of volumes that have emerged. 17.6% higher, now at 1934. Now there is also this news that the company slipped post. They had announced that the company will be investing in the new entity earlier this month, but now they're reversing this decision, and therefore the stock is now moving up pretty sharply. Remember on, we had seen that the company announced that it has decided to reverse its decision to invest in the new company that will be formed by its former CEO, Rohan Verma. And after this reversal, you can see this sharp move. But Brijesh, do you think after today's exuberance that we are seeing on the decision, the stock can continue the strength?
Now see, already stock had moved up significantly with a volume of 17%. As I've been saying, the previous stocks, most of the stocks are trading below the 200-day moving average or 50-day simple moving average on a daily chart. So whenever they make a double bottom or triple bottom, we see a pullback, and that pullback is at least towards the level of 200 simple moving average. Now this 200 simple moving average of this stock of MapMy India is 1970 zone. So it might try to touch that level of above that 50 rupees. So not at the present date, let it trade above this level of 1970, then be on a buy side, and suppose someone has bought it at the downward zone, so keeping a stop loss of 1800 or 1820, hold on would be advised. 1970 is the first level where the resistance lies. For the fresh bank, let it cross 1970, and with the stop loss of below 1900, play for the target of 2200 zone. So present rate should be avoided because hardly it is 50 rupees up. So let it break that 50 line, then be on the buy side.
Those with a slightly longer memory will remember that on 21st of June, there was a research report that came in from Goldman Sachs, which put a very, very high price target on MapMy India. The stock moved from 2,000 rupees to 2,700 rupees in a span of 3 days, and from then on you saw a selling pressure, and Sakshi, you won't believe that there was an OFS also, and then comes this news that the CEO has resigned and he will be taking a part of the business with him, and the company will invest. Well, the markets have different ideas, and the selling that this counter saw convinced the owners that it's better to reverse that decision rather than see this constant erosion in value. So 1945 is the intraday high, so far 17-18% higher. Moving in strength, ladies and gentlemen, is D-Mart. I distinctly remember talking about it 3-4 days back. This is something which is corrected substantially and is now doing pretty well in trade. Of course, Friday we saw a nice uptick, but this is something for the real long-term people who want to buy pain and are willing to wait for a while. So this is how the market is structured. 3:18, 12 minutes left. Flat, quiet day on the broader space, but if you are an individual stock trader, then an exciting day. ITI, top traded counter, up 17%. It was up 13% yesterday, and of 3,395 crores worth of trades. Fresh move coming into BSE, 1.2% higher. You have strong moves on CDSL and CAMS as well. And if you really like 20% circuits, well, there is Aditya Birla Money, which Sakshi's pointed out since morning. Now about 22 crores worth of transactions have happened. Pharma company IndSwift, 20% higher, 32 rupees 50. You have MTNL, it's a colleague, a PSU colleague of ITI, again in the telecom space, 12% higher. Trident, which we've discussed, 11% higher. You have BGR Energy, something that we use, 50, and of course CEAT and the other counters. Himmat Singh CDE, 8% higher. Banswara Syntex, 8.2% higher. Sakshi, all in all, a good day for individual stock traders, but a flat as far as the
Absolutely, Shell. 3:20, just the right time to ask Brijesh ji if he can share with us any BTST or STBT ideas now. Brijesh ji, over to you. What should one do? Would you pick stocks for the long side or the short side now?
From individual point of view, if you ask me, then I'll say that still, it is in the range of, market of 200, 300 point, but towards the selling side. But some stocks which are, showing a sign of a buying, so one can look out for the individual point of view. Like in metal pack, if we talk about Jindal Steel and Power, stock had moved up significantly and still it's been moving up. 968 around, it's been trading. So present rate or dip towards the level of 962 around, one can be on a buy side. Stop loss wise, if I talk about, then keeping a stop loss of 952 and play for the target of 980 zone. Second counter where for the BTST has been considered, then look out Wipro it again started moving up and we have seen stock making a new for the week. So present rate can be used to take a long position with a stop loss of 300, play for a target of 312, 315. So.
Okay. Got that. So that's as far as the BTST, STBT trades are concerned. Let's again look at some of the other pockets that we can probably spot for a trend for tomorrow. IT is picking up strength, Brijesh ji, and we did discuss one of the stocks. You talked about Wipro also, 2.5% higher. It's garnering more strength. Emphasis, Persistent, L&T Technology Services, LTI Mindtree. So these mid-cap IT names are also garnering some strength in trade today. Do you think the momentum will continue tomorrow in the IT pack? Should one keep their focus here?
Yes. Obviously, Persistence, Wipro, they are more. There is one more stock which I'll would be updating, like Newgen Software.
Okay.
So Newgen Software, when the show started, I was been looking at it. At that time it was trading at 1406. Now it had moved up to 1420 or 22. Still nothing wrong in it. It has moved up 20 rupees hardly. So present rate or dip can be used to take long position with a stop loss of 1325. Pay for the target of stock and made a nice base in the zone of 1100, and the previous swing high of 1332 has been broken with the volume. So still, a lot of stream has been left on the higher side. So one can look out if someone wants to play for the IT, Wipro, Persistent, Newgen Software look promising for the short term. That has been considered.
3:23, ladies and gentlemen, 7 minutes are left. As we've been pointing out, it's been a quiet day. Let's look at some of the profit booking that has happened to balance the bullish talk that we always have. Just a moment, let me mark a couple of stocks in the pharma space, Lupin in particular. maybe there's an opportunity here. Let's look at the top losers on NSE 50. Well, we've discussed Godrej Consumer Products, Syngene dropping 5.7%, 867 is what I see. PPL Pharma, profit booking from record high levels, 4.3% low. Star in this particular counter, much below IPO price, 4.2% lower, 468.25. Jubilant Pharma, this is also slipping 3.8% lower. Pfizer is in pain, 3.6% lower, 5,058. Concord Bio, and of course a bit of profit booking also on Divi's Lab, 2.8% higher, lower at 5958. Some of these stocks have a run up very sharply and are now showing signs of profit booking. Laurus Labs 3% lower, and of course you also have Biocon about 2% down. So with Pharma and FMCG, this is the side that is bringing the market lower, but metals and when you look at strength which is there in the entire mid-cap space and parts of IT space, this is where the index and the market are holding up. You have 1284 stocks in the green and 1111 stocks in the red. So pretty much even Stevens for Monday, nothing much to be worried about. We are in the process of consolidating the rally that we saw over the last 3 weeks or so, and a quiet trade today, Sakshi.
Right, absolutely. 5 minutes to go before we shut shop, but another this space that we've been focusing on for many days now, and we've checked them again today. The wealth creating space, capital markets related stocks. Anand Rathi Wealth now up 5% at 45.24. Geojit Financial Services up 5%. You have Motilal Oswal up 3% in trade today. Several of them actually up and about. Angel One we've already discussed. NAM One India we've discussed. How are you really looking at the top 2 or 3 bets of yours within the capital markets related stocks, Brijesh ji, that could carry on the momentum? Brijesh ji, could you unmute yourself?
Yeah, sorry. So, Sakshi, I was been talking about, there are few stocks right now which are moving on the IT pack, followed by the textile, some stocks with the chemical. Regarding with the stock which you have talked about, I'll still be away from that because I would be playing towards the trend where the buy side is being lying. So, playing with the momentum would be the better idea for the short term bet.
Okay, got that. Well, okay. Brijesh ji, we will thank you then on that note and start wrapping up the trade for today. 327 right now. It's a 43 point of a downtick on the Nifty, 24,633. Well, the pockets that managed to pull up in this setup of the market today are the metal space, now 0.7% higher, the top moving sector. Mid caps garnered more strength, 0.6% higher for this one. Consumer durables did well, 0.4% up. IT pulled up in just the last half an hour in trade, now up 0.4% in trade as well. Real estate, infra, small caps and the financial services spaces, these are the pockets that are garnering strength. And it is also because HSBC has actually come out with its report on the IT sector and several of the stocks within the space right there. So HSBC has actually upgraded Wipro to hold now, raised the target price to 263 for this one. Then it has upgraded Infosys to buy from hold, again raised the target price to 2125 from 1975 earlier on this one as well. It has however downgraded Tech Mahindra and Co Forge, but upgraded Emphasis to buy from hold, raised the target price to 3600 on that account. As well. So, and also upgraded LTI Mindtree to buy from hold and raised the target price to 6960 from 6000 earlier, is what we are getting to see. I think that's also one of the key triggers that has led to this sharp move in the IT space right now. We'll also look at the top movers on the Nifty. So it's Wipro that ends 2.6% higher. L&T managed to continue to pull up above that 2.2% mark, ends with strong move. SBI Life, Tata Steel now and BPCL are the other top winners as far as the top 5 movers on the Nifty is concerned. On the lower side, again, like I pointed out, Tata Consumer, HUL, Nestle, Asian Paints and Tata Motors are those that have dragged. Tata Motors is once again below that 800 mark at 798 now, 2.2% lower in trade. In the F&O space, you have Supreme Industries, Kalyan Jewellers, Delivery as the stocks that continue to outperform. Anything else, Shell, that you'd like to add before we wrap up?
Sakshi, I think individual stories were abounding. Look at Kirloskar Engineering, 5.2% higher, 1179. And in the list, in this growing list of all-time high counters, you have Chalet Hotels, Max Health. These are the 2 or 3 counters that I'm looking at. Anand Rathi, 5% higher. Sigility, no stopping it, 5% higher. This is a recently IPO that got listed. And of course, Signity Technologies. This is something that Coforge had purchased at about 1300 rupees, now at 1915, 7.5% higher. This is a fresh record high on the counter. Nelco, Styrenics, and of course, a strong move coming into Indraprasth Medico as well. These are the counters that I'm looking at.
Okay, we'll start wrapping up now. 52 points lower is what we end at on the Nifty, 24,625 viewers as far as the major benchmark index is concerned. The Nifty Bank, although also ends about 1/10% lower, 53,420. It's an 89 points of a cut for this one. And the India VIX, although managed to pull down, like, if you see the volatility index was up by 3.5% in the morning, it's now down by 0.07% at 14.1. And that's led some of the pockets to actually do up very well. We'll see whether this recovery amidst sectoral picks and specific stocks continues in a day like tomorrow. But today is the second day in a row when the markets have shut shop below the flat line right there. We'll wrap it up at that. Do stay tuned on to Business Today. We will continue to get you more exciting coverage beyond the markets as well in the world of business. So stay tuned, and there's much more for you to see. With the most of the immediate key indicators now out of the way, what is it that the markets are really pinning their hopes on for a clear direction going forward from here? Of course, as we move closer to the end of the year, we are expecting a Santa Claus rally to really come up and come up strong. There were signs earlier. Will this continue?